Okay, so look, I think we'll crack on. So, well, look, thanks for everyone for joining. Hopefully, you don't all have Zoom fatigue from this morning, and apologies. There's been a few technical hiccups with slides and so on. So, hopefully, everyone will be able to see the slides okay today that I have. So, basically, just going to take you through an introduction to me and my team. For 10 minutes or so, and then hopefully take some questions around structured property finance. So my name's Tom Madden. I'm the director. I head up the structured property finance team. Yeah, as I say, we'll head through the slides. So next slide, please, if we could. As I say, as and when anyone has questions, then do please feel free to post them on the chat. I'm sure you're all used to this now and have the opportunity to run through some of the sessions with my colleagues earlier today. So yeah, our structured property finance team is a new team. It was created in the middle of the pandemic, so not exactly the prime time to be setting up a new department. But yeah, we've basically set up a team to deal with larger, more complex bridging and development finance requirements. So we are predominantly in the short-term finance market, but we obviously have our buy-to-let product to work with our colleagues in buy-to-let as well on longer-term in financing needs. So the team is, as on the slide there, myself, team director, Gary Clark and Mike Minnie, who are senior BDMs. All three of us have been with LendInvest for over 5 years. I think Gary was employee number 3 or 4, so he's been with the team or with the company around about 8 or 9 years now. So there's vast experience, not only in the market, but also with LendInvest specifically. So we understand, what makes the business work and where we need to turn to get the right answers. But yeah, it's a team that we're there really for two functions. We operate to deal with our own relationships, to manage our own relationships, which are brokers who specialise in structured finance, who deal with high value, high net worth clients. And we're also there as I guess you call it like a service function to the wider sales team. So we work with our BDM colleagues who cover the regions to work with their brokers and also with the wider sales team. So if we could just flick on to the next slide, and actually the one after that. So yeah, basically I want to just take everyone through the types of deals we do. So the types of security that we cover, the types of people that we lend to, and a few case studies before we come on to some questions. So yeah, the structured finance team is predominantly concentrating, as I said, on short-term funding, so bridging and development and various different guises of those products. So on this next slide here, we're looking at really what types of securities we're looking at. So it's sites with residential planning or planning potential. So we will look at land without planning and as I say with potential, especially if it's residential potential. So that could be greenfield, brownfield, could be existing commercial stock. We offer financing for refurbishment, conversion projects. So that's that could be something where we're helping to acquire and the client is getting on with funding the works themselves, or it could be something that's funded via our development finance product, which we work alongside Steve Larkin and his team in the development finance group, who basically will take over leads where we've pre-qualified them and where it's existing brokers that we work with, that we have relationships with and have done business with previously, and then the development finance team will manage those deals through to completion, and then post-completion in terms of the actual construction work itself. Development exit, which hopefully some of you have had the opportunity to listen to Peter McDermott, who just did a session on development exit, and and obviously the popularity of that product now, but also for the last few years it's been one of our biggest products as a lender. So we I probably should have said to start off with, really, in terms of just sort of giving you some scale in terms of the deals that we look at within the structured property finance team. So we're really looking at any deals from £1 million up to sort of 15 million is the current market that we're in as at today. Historically, we have looked at much larger projects, but yeah, and hopefully we'll be back to those larger funding needs in the near future. So going back to the property security types, MUFBs is a big one in the market in terms of those, and also title splits, whereby we're supporting clients who are purchasing blocks and looking to either refurb them or just simply split them out into leases and selling them on or refinancing them on as individual single let investments. Residential portfolios is something that we can support with in terms of acquisition of those portfolios predominantly. Obviously, our buy-to-let product can also cater for the long-term financing needs of those individual units. And then semi-commercial and commercial, as I said, majority of our lending that we do is residential led, but we're still very strongly in the semi-commercial sector, and we're happy to look at various different types of commercial investments and commercial acquisitions to see how we can support there. And then more recently, just in the last 6 months or so, CBILS obviously been a big factor. Thankfully, my team and the wider business has been able to support a lot of our brokers and their clients with CBILS lending to give them the opportunity to access that scheme and support their business needs. So if we just flick over to the next slide, which is who we're lending to, some examples of the types of borrowers that we as a team, structured property finance team, are lending to. So I've put these, I guess you could say, in some form of order of priority in terms of who we tend to deal with mostly. So SME developers is obviously our core clientele. So we're dealing with them, right the way through their life cycle of each of the schemes that they are working on. So it could be from pre-construction type loans right through to building projects out, and the other side on development exit and even long-term holding. Real estate funds. So we work with quite a few real estate funds in the UK and wider afield, where again they may be sort of semi-developers. They may be specialising in planning plays or in value uplift from land acquisitions or from site acquisitions. So there's lots of different types of real estate funds. There could be family offices, there could be investment funds, and there's obviously often some complex structures around those that we need to get comfortable with. Portfolio landlords, professional and property professionals. So again, obviously a growing area in terms of the professionalisation of those of portfolio landlords in the UK, and we're supporting them with acquisitions and refinancing and capital raises on their existing portfolios. And as I mentioned, complex borrowing entities. So whether they are sort of fund structures or multiple layers of businesses within a group, non-UK entities and non-UK shareholders. So it's something where we're obviously happy to take a look at those on a case-by-case basis and see exactly how best to structure, how we can get comfortable with it, how the client can and their legal advisors can get comfortable with it. We'll flip over to the next slide now, which is just a couple of examples of the types of loans that we do, and then I'll come on to a few case studies, and hopefully we'll see a few questions. So as I said, feel free to drop some questions in there if you can. So the types of loans, what types of loans we fund, we have site or property acquisition is obviously the sort of the key product that we're assisting with. As I mentioned earlier, anything from sort of £1 million up to £15 million acquisitions tends to be up to 65 or even potentially 70% loan to value. We're looking at planning plays. We can assist with pre-construction costs, We can look at planning enhancements, as I said, land with and without planning. Obviously, construction work side by side or hand in hand with our development finance team. Again, hopefully some of you have had the chance to meet or hear from those guys earlier today on some of the sessions that they were running. Refinancing once a milestone has been reached. So this could be potentially, refinancing from another lender, a lender potentially in our corner of the market, possibly a bank, whereby the site may have, or the site or the property may have come through a milestone. So that could be a refurbishment's taken place, or PC's been achieved, or back earlier in the process that a planning approval has happened, and you're looking to, the client is looking to enhance it further, and therefore needs another period of consolidation before they're ready to build it out or sell the asset on. And then transitions. So transitions are really a massive part of our team and of the business. So, we aim to be a one-stop shop really for a lot of those property professionals that I mentioned on one of the earlier slides. So it can be from acquisition, getting the site in the right position, whether it's planning, whether it's preparation work, building out, whether that's conversion, new build, ground up, airspace. We can look at lots of various different types with our development finance team, and then sale period through our development exit, and potentially even onto long-term hold through the buy-to-let products that we offer to the market. So as I said, that transition piece, and hopefully there is, we have transition application forms, which are a simple sort of 2-page application form for our brokers and clients to complete. We look to use similar or the same professionals. So, whether it's valuers, solicitors, to try and smooth that process, to try and keep the costs down for the client. That is a really big part of what we do. So yeah, £1 to £15 million loans predominantly within my team. Obviously, LendInvest do loans from sort of £75,000 up to 15 million, but we concentrate on those larger, more complex and bespoke borrowing needs. Short-term facilities up to 24 months on development and potentially on bridging. Watch this space. Hopefully, we're going to expand that offering out a little bit further in terms of the financing needs that we can meet over the course of this year. But yeah, for now, if we move on to the next slide, which is a couple of case studies. Okay, so apologies, I'm not sure if those have come up for you yet, but I was going to look at a few case studies. So a good example of a land case study where a client was seeking approval for 20 flats. If you can see this slide, it's a stock image as opposed to the actual site. It doesn't particularly look like Cambridge, or certainly Cambridge City Centre, but 20 flats before moving on to development finance. So that was a loan at £2.2 million, where we lent 65% loan to value, valued at pretty much bang on the purchase price. So we obviously supported the client there to acquire that, and they're currently going through planning permission to be able to get approval for those 20 or so flats, and we're hopeful that we're going to have the opportunity to look to offer them development finance once that planning comes through as well. Second scheme there is a development scheme, so £4 million development of a new build 21 units in Ashford, 21 2-bedroom or 1 and 2 bedroom flats. This one was at 65% loan to GDV. So on our development finance, we can go to 65% loan to GDV, potentially up to 90% loan to cost. So hopefully you, as I say, have had the opportunity to find out more about that product today as well. And then an example in Sheffield here of a relatively small. This is actually, should say, 61% loan to value. There was a development exit. Again, this was a transition whereby we had helped them build out the site and then moved it onto our development exit product to allow them a period or an extended period of time to sell the units in the current market. So just flicking over to I think probably the last one or two slides now. So why choose us? Well, as I mentioned earlier, look, we've got an we've got expert advice. We've got a team that of myself, Gary, and Mike that have been around for LendInvest, for over 5 years. That all have vast experience in the real estate and specialist property finance market. We've got a reputation as